right. We have the power. We do believe we are a global institution in the making. Armed with the power of expertise, the world is ours for the taking.
Praveen sir, over to you.
Thank you. Good evening and welcome everyone. Thank you for joining us today to discuss the Intellect Design Arena Limited financial result for the second quarter of fiscal year 2020-21, ending 30th September 2020. The investor presentation and the press release has been sent to you and is also available on our website. Our leadership team is present on the call to discuss the result. We have with us today Mr. Arun Jain, Chairman and Managing Director, Mr. Venkat Saranu, CFO, Mr. Prabal Basu Roy, the advisor to the Chairman and Director on the Corporate Board, is also an ex-CFO of the Polaris Group. Mr. Manish Makan is the CEO of IGTB. Mr. Rajesh Saxena is the CEO of IGCB. Mr. Banesh Prabhu is the CEO of Intellect Seed. Mr. Jaideep Billa is the CEO of ISWell. Besides, there are other senior members of the Intellect management team who are present in the call. Mr. Arun Jain will first brief you on the result, and Mr. Venkat Saranu will take you to the financials. The respective CEOs, that is Mr. Manish Makan, Mr. Rajesh Saxena, Mr. Banesh Prabhu, and Mr. Jaideep Billa, will comment on their line of businesses. Mr. Prabal Basu Roy would summarize the same. This would be followed by Q&A, which will be replied by our management team. One safe harbor. I would like to remind you that anything which we say which refers to our outlook for the future is a forward-looking statement, which must be read in conjunction with the risk the company faces. I hand over to Mr. Arun Jain to give his briefing. Over to you, Arun.
Thank you, Praveen. First of all, I must thank every one of you participated in this call and showing the interest in Intellect journey from India as a product powerhouse over there. I also like to thank every employee of Intellect who are working in a difficult situation like COVID. Why I say difficult situation? Because Intellect is supporting the largest customers of the world and their mission critical applications of core bankings or liquidity management or treasury management or FX management or money market management, where trillions of dollars get transacted, and all these applications are managed from home. So first quarter was still a early start, and we were learning and we were excited about how do we solve the problem, but it's now becoming a monotony, and over the period of time to keep the same energy and supporting it remotely is must require we need to create energy. Teams which are giving a digital solutions to their customer, are now those teams are becoming digital by themselves. So the virtual teams and the digital teams, what we call today. In the last quarter, I covered our journey of last 4-year journey, how we built step by step the entire brand since 2016 when I let go services business and focused on product business. A tough journey of last 4 years from the perspective of investment, where it's a 5-stage process of product business. From building a product is a stage 1 to creating a first few reference sites is stage 2 to create a multiple live sites is stage 3. Stage 4 is multiplying those into the new geographies. And stage 5 is where we start getting operating leverage fully. And so I think we are currently at a stage 4 of our business. In some of the businesses, we are getting into stage 5, but as an overall business, I will rate ourselves as a stage 4 business, where our products are industrialized. Our products are competing with the global giants who are the established player over the last 30, 40, 50 years, like FIS, Finestra, Pfizer, Temenos, who have in this journey over the last 30 years plus. Our products are competing and winning against them because of the superior quality of our technologies and superior quality of our domain intake because of the global participation. So entire business model today has been abstracted in 900 APIs on all the 12 product lines, which is one of the unique and the largest API marketplace Intellect could able to create. And the beauty of this is our thesis was that we need to have a complete solution provider to the large bank rather than a one single provider, because the efficiency of the banking systems comes from the connecting the dots between the multiple system and having a common data models. And that is what is now with the cloud technology in place, we are able to get that benefit of building APIs. And this 900 APIs are one of the largest APIs in the world in fintech space. So that's why it's a multi-product fintech space. This is helping us for quicker implementation because of our design thinking application. We are able to implement our solution 40% faster than any of our competitors, which is giving us good winning propositions. We are able to do POCs or proof of concept of our solutions in 2 to 6 weeks time to prove to the customer how our solution work. It's real time on their data, on their systems. And these are driving higher license revenue, which we have grown substantially during this quarter because of the ratio of license to implementation is coming down. And on other side, it is maintaining our implementation revenue almost in the same line as it was last 6 quarters. So the advantage is license revenue has a long tail revenue in terms of AMC. So that's why we are focus is to increase our license revenue. So $1 million of license revenue over the 10-year period gives $3 million TCO for the company versus implementation, which is one time. So that's how we look at the numbers in our system. Our license link revenue in last 1 year has moved to 57%. So initially when we started our one of the investor presentation I was making, we think what is it, somebody asked a question, what is your vision of the company? I said 60-60, not 20-20. I said 60-60. 60% business should come from license link revenues and 60% gross margin. That was our dream in 2017 or 2018 investor conference. And today we reach 57% is the license link revenue versus 42% last year, same quarter. Our cloud revenue has got two components. One is monthly subscription revenue, which are more or less constant and it constantly grows. And second is a consumption-based business model. So consumption-based business model based on the consumption of the transaction or consumption of the data. And that business keep up and down depending on the volumes which is there. So this quarter we are seeing this small dip in a consumption-based cloud business model. Now let me take how do I see business model emerging in financial technology space, how the customers are seeing in the market space in Europe, Americas, Middle East or APAC. I think one pattern we are seeing is customers are now fully accustomed to COVID situation and they realize their reality that this is going to be there. It's not going to go away. And now the actions on digital, all the budget approval on digitals are taking shape. All the approvals are happening, all the evaluations are happening, POCs are happening. So I think that is coming as a business as usual right now. What patterns they are seeing in next 2 to 3 years window? I think the two patterns which I am observing very, very carefully. The technology is becoming in financial sector is becoming like a API economy. We used to have iTunes earlier where we used to buy and sell songs. Now it's becoming a API marketplaces where solutions can be available on the cloud and customer can pick up the multiple choices of the APIs to design superior product for his customer, for a specific segment and for a specific customer need much faster. And this is almost like a marketplace economy evolving in fintech space. So against this API marketplace, I want to take you through where Intellect is playing a game. Intellect has invested two things. Last year, we made a additional R&D investment for bringing all the product on the cloud and making it API enabled. Today, we have a 900 APIs available. So that's the space one. And these APIs are connected to my 100 horsepower product engines, whether the engine is core banking engine or lending engine or credit card engine or a wealth engine or cash management engine or a trade and supply chain finance engine. Those engines are which are rock solid, built over the last 20 years of the domain knowledge. That engine is supported by 900 APIs. That is the first level of outcome we have achieved. Second outcome we achieved is we created a platform called iTurmeric, which I highlighted during my last call. That iTurmeric platform. This is coming from my R&D shop by the smart engineering team, which is sitting there. And that helps us to do a quicker UCs for the customer. Turmeric has got 5 studios, from API studio to integration studio to orchestration studio to experience studio, and that too sitting in AWS cloud. We are able to demonstrate to the customer that our solutions are infinitely scalable. So these two technology, iTurmeric technology and product technology, are complementary to each other and creating we are positioned rightly in many deals because of these two technologies. Second pattern which is there is where AI and machine learning is impacting the financial sector substantially. AI and machine learning is used in customer prospecting, right kind of prospecting, right kind of a customer acquisition, right kind of underwriting decision, right kind of a credit decision, right kind of a risk management decisions. So data is becoming a critical area using AI and machine learning. The investment which we made in Intellect Seek, which is now run by Vanish Prabhu, where a lot of vocabulary you must have heard, data is a new oil. Now Intellect has 10 such customers who pick up this data from my Intellect data stations on AWS cloud. So they can connect APIs on Intellect data station to pick up the data packets. And each data packets, if he has to pick up 100,000 data packets for the prospective customers, it can be priced at $2, $3, $4, depending upon the number of fields he is accessing on those data elements. So that is a very, very interesting model which is evolving. And now its proof of pudding is that it's being used in US, one of the most difficult market and most advanced market, where our data superiority is over 94%, best in class from anybody else. And this data is coming from more than 8,000 data sources, which is getting connected onto this platform. So I didn't share this entire statistics with you earlier because the volume and money which is coming in through this channel may not be as significant from a financial perspective, but having a liberty insurance, which I discussed earlier, where the entire team has established and system has gone live and they are consuming this data for their underwriting decision, is very, very big breakthrough of R&D for our R&D teams. And since this is built as a platform, which we will be launching in next few months after getting a right strategy in place, right pricing strategy in place, that is emerging as a major positive engine, which can be applied on my financial products of core banking, lending, trade finance, wealth, as a common frame. So in short, I think, or in summary, I would say, I think results of this quarter are quite in line what we have communicated to you last quarter. We have demonstrated that we are in a high operating leverage play right now, and we have a multi-product fintech company. So these are two messages I have given. So operating leverage has moved the EBITDA from 20% EBITDA margin last quarter to 24% EBITDA margin. We looked at it over the next 4 quarters. We should be moving towards 30% EBITDA margin. I think our journey is there, and we should look at it, this EBITDA margin, to grow further and business to grow quarter on quarter. The financial data will now I will hand over to Venkat Sarnu, who will present the financial results, followed by the small business snippets will be presented by business managers. What are they seeing in the market and what are the achievement of this quarter? So over to Venkat Sarnu for the financial results. Praveen, can you load it?
Yeah. Thank you, Arun. Good evening to everybody. Yeah, we are happy to announce the result for Q2 21 as well as H1 21. Yeah. Yes. Go. Yeah. Yes. Just hold on that. Being a product company, it is always to compare our results with an annual basis. That is the reason for either the Q2 FY21 as H1 FY21, we are always comparing with the result of the a similar period of the last year. So let us compare with an annual basis. That is how Q2 FY20 will be compared with the Q2 FY20 and H1 FY21 will be compared with the FY20. So that we'll get an annual view in terms of the overall growth trajectory is concerned that. In Q2 FY21, we have reported total revenue of in INR term 3,730 million, which results to 14% on year-on-year growth. It is a phenomenal growth as compared to the past what we achieved in terms of the revenue growth is concerned that. In terms of dollar is concerned that we have reported a revenue of 50 million growth, which registered that 80% growth on year-on-year. In terms of H1 FY21, in terms revenue terms are concerned in INR, we have reported a revenue of 7,223 million, registering a growth of 8% on a year-on-year basis. Similarly, in terms of the dollar terms are concerned that we have reported total revenue of 96 million. Now I'll come back to the license and AMC and SaaS revenue what we have reported. Yeah. We have reported a license revenue of in terms of INR is concerned that 985 million, registering a growth of 131% on a year-on-year basis. In terms of AMC is concerned that we have reported a revenue of 748 million, registering a growth of 19% on year-on-year basis. Cloud and SaaS revenue, we have reported 345 million, registering a growth of 25%. As you can see here that our license revenue is 131%, is a phenomenal growth as far the license growth is concerned that. I'm coming back to H1 FY21. Similar factors of the license revenue is concerned that we have reported a growth of 62%. As far as AMC is concerned that we have reported a 22% on year. As cloud and SaaS is concerned that we have reported a revenue of 734 million, registering a growth of 44%. So in all fronts, like either you say that SaaS revenue or license revenue or AMC revenue, the growth is far better as compared to what it was as compared to previous periods. Can you go to the next slide? Yeah. Now this is the most important slide is regarding our gross margins and EBITDA and PAT. In Q2 FY21, our gross margin is 2,096 million, resulting to 56% a margin, a GP margin. So whereas in last year, a similar period, we had reported 45% as a GP margin. So that for 45%, it moved to 56% in Q2 FY21. The another important aspect is that as far as EBITDA is concerned that we have reported 904 million as of this quarter, which resulted in 24% as Arun rightly mentioned. But the important aspect what you have to note is that a similar period of the last year, we had reported an EBITDA of 49 million. So from 49 million loss, we made a profit of 904 million. So it is a huge amount of improvement in terms of EBITDA is concerned that. Our net profit is 592 million as against a loss of 170 million in the similar period of Q2 of last year. When you come back to H1 FY21, our gross margin is 3,976 million, resulting to 55% of the GP margin. Our EBITDA is 1,617 million. Our net profit is 1,018 million, which is which was as compared to last year, which was a 136 million in terms of the net profit is concerned. That basically it is like that, from 136 million loss of loss, make it to a profit of 1,018 million profit is a great improvement from 136 million to there. Now I'll come back to the cash and debt position. Our effective operating cash flow is 385 million in Q2 FY21 and 2,160 million in H1 FY21. It is a huge amount of improvement as far operating cash flow is as compared to the previous periods are concerned. That our cash and cash equivalent is in INR 1,654 million. Our total debt in Q2 FY21 is at 707 million as against 2302 million in Q2 FY20. So we have also a reduction of a total debt of 1595 million, 1595 million into the debt reduction is concerned. That our total collection and investment in product development is concerned. That our total collection for Q2 FY21 is 3,343 million, up by 223 million as compared to Q2 FY20. Our total collection for FY21 is that 7,707 million. Our net DSO days is 127 as of this quarter, as compared to 126 days in the similar quarter of the last year. Our investment product development is that 284 million, a similar amount in the last year and the similar period as well. So another aspect is that our order backlog relating license based and is that 11,940 million as of Q2 FY21 as against 11,000 million in Q2 FY20. So that there's a good improvement in terms of the order backlog as well. Can you go to the next slide? As you can see that in the current quarter, deal wins are 6 deal wins, which includes 4 large deal wins as well, and we went 19 cases as a go live cases. Get to next slide. This is an off-year basis. Deal wins are 10, which include the large deals are 5, and go live is 31. Go to the next slide. Next one. This we have given a detail in terms of our total collection, which talks about 3,343 million in a different region wise. Similarly, we also given our data days on the basis of the different regions, but on a total basis, as I mentioned in the previous slide, it was 127 days. We also have given a calculation how we have been calculating in terms of our data days are concerned. That is easy to calculate from the financials what has been published. Go to the next slide. As we talked about in the previous slide, once again that we are having a strong order book. As I mentioned, the total amount is 11,940 million, which was 11,560 million in the last quarter. However, I think we have to also look into that. As we mentioned that looking at the cloud growth, we decided to give in terms of annual recurring revenue for cloud and subscription based revenue at a Q2 FY21 is 1,379 million as compared to 1,100 million of a similar period of the last year. So there is a good improvement in terms of that as well, in terms of the ARR is concerned. That, and the most important aspect is that our repeated revenue from existing customers to 93%. This is where we get our business and we are able to do whatever the achievements we did so far, what we have been talking about. Go to the next slide. Yeah, this is very, very important aspect actually is that, as Arun rightly said, that we have 4 streams of revenue. One is the license revenue, second is the SaaS revenue, third is the AMC revenue, and implementation revenue. The major margins comes from the 3 streams of revenue, that is license, AMC, and the SaaS. So these 3 streams of revenue were 41% in the last quarter of the similar period, which was 41%. Now it moved to 56%. This is what actually real the growth driving factors, apart from the various cost efficiency, other delivery efficiency, what you have taken that. So this is an important factor that in fact our competitors are having a better ratio, so that we have further more leverages in terms of improving our margins are concerned. That this is an important slide what you have to look into that. Going forward, we'll be presenting that how this curve is moving on a quarter on quarter basis. Yeah. So now here we are talking about that in terms of the active pursuits as well as the destiny deals. As you can see here that we have total $540 million of worth of opportunities in active pursuits. So as a result of that, the average deal size in terms of those pursuits are concerned, that it comes to $2 million per average deal. So it is a good amount of average size in what we have been pursuing that. And similarly, as we mentioned that destiny deals, we are talking the total 41 destiny deals. For our internal calculations concerned, that any deal which is more than 20 crores is called as a destiny deal. As of today, we are having 41 deals, which I'm going to get back to you in terms of the next slide, is that how the breakup of these 41 deals are also happening there. So as you can say here that deals more than 50 crores is around 9 deals, between 30 to 50 is 12 deals, and 20 to 30 crores is 20 deals. So that means what it talks about, that we have adequate opportunities in order to achieve the numbers what our chairman has given a guide, preamble in his speech. Next. So these are the currency wise data. I think maybe we can skip it that. Next. As you can see that our advanced market share of the business is 57%, whereas in terms of the India is concerned at 15%, and the rest of the world is 28%. So we are having a good business growth in terms of advanced market. Advanced market, what we call is that USA, Canada, UK, Japan, Singapore, all and Australia, all these countries, what we treat as an advanced market. From those countries, we got a business of 57%. That means they really talks about the quality of the business and quality of our products in those countries. Because as you know that in order to get any business in those countries, unless you are really capable and the products are capable, you can't get the business. So hence 57% is a good number for a company of our size. These are my sites. I think I'll be handing over to Manish now.
Thanks, Venkat. You can go to next slide. I think overall we had. Thanks, Venkat, for sharing all of that. We had a good quarter and making it consistent, as Arun said. I'll focus on the GTB aspect of the qualitative piece of it. Our biggest product from a market reach perspective and a leadership perspective, DTB, we managed to get our 57th customer for this specific product and taking our overall customers count to 91. This is one of the largest banks in a fairly large Southeast Asia country, which will be named, we will be announcing very shortly. The formal PRs are working out right now. We also, third quarter consequently, another large deal on liquidity was sold, and second quarter consequently in US for liquidity. That continues to establish our market leadership in liquidity, where, like I've shared, 23% of global cross-border cash concentration happens through our platforms, and that's driving attraction. And this is now customer number 11 for me in US, and overall for Intellect, the 25th customer in North America has been established. For both products, the digital transaction banking and Intellect liquidity, the demand and funnel is looking decent. We have a healthy funnel which we are working on monetizing in the coming quarters to ensure we remain predictable and consistent growth. From a product leadership journey, like we shared, now 3 of my platforms are completely microservices cloud native, which is digital liquidity, which is showing the wins consistently, contextual banking experience. This goes along with the liquidity platform, and then we take it across the entire corporate banking channels. Our first customer go live in Australia happened in the last quarter. It's quite significant from that perspective. And we've got 5 more go lives scheduled in the next 2 quarters. We will also be launching our Intellect Payment Hub 21, which is completely cloud native, in the next quarter, which is ready right now. And we're making the market go to market strategy on that. From an analyst, we continue to be consistently rated #1 in most categories from a corporate banking perspective. The Forrester Wave called us as a strong performer. IT came out with a report on virtual accounts, which is the new trend where banks are how they're managing the accounts, where we were rated as one of the leaders over there. And consistent analyst accolades, like I said, building upon the last quarter IBS #1 in the sales league in the wholesale banking. So good build up from analyst, the product journey, leadership from a product development as well as market, to ensure we have a consistent growth and a consistent performance. So thanks for that. And I'll hand it over to Rajesh to share about GCB.
Thank you, Manish. If we can have the next slide, please. Thank you. So in continuation of my commentary after the first quarter results, wherein I had mentioned that I'm cautiously optimistic about the second quarter, I'm happy to state that both Intellect and GCB had a good second quarter, FY21. Let me now walk you through the business highlights for Q2 for GCB. In this quarter, we closed 4 deals, including a large multi-million-dollar upgrade deal for NABARD, who has decided to go again and upgrade themselves to our core banking and lending solution. Last year, we had already established IDC as a market-leading product with critical mass. I'm happy to share that both our lending and central banking product, which we call as quantum banking, are now reaching maturity. They are winning deals and reaching critical mass in revenue. In QCBS, our central banking proposition, we are in the last 2 stages for we are in the last stage for 2 large central banking digital transformation, which will get decided in the next couple of quarters. From a geography perspective, we continue to be bullish in Europe, which as a market we all know has the pricing leverage. We have one destiny deal in continental Europe that we are chasing, which will get decided in the next couple of quarters. Moving on to product leadership journey perspective, we continue to make rapid strides towards an API-first microservices and cloud-native architecture for both our core banking and lending products. In a recent POC, proof of concept with a client in Europe, we have been able to demonstrate to the client a TPS, a transaction per second of over 4,500, which gives our product extreme scalability and results in lower cost of hardware. Mind you, these are market-leading numbers. Our client, Santander Bank UK, has passed the open banking requirement of UK by using our IDC core banking product. Despite COVID, from a delivery perspective, we've been able to initiate 7 projects completely remotely during this quarter. From an analyst perspective, we continue to be well covered by all the analysts. Last quarter, we were rated as #1 in the sales league by IDC from a retail banking perspective. This quarter, happy to say that we've been rated in the top 5 for modular core banking, especially for digital bank. And this is something specific for digital challenger banks that Intellect has been rated. The important point to note here is that both Infosys Finacle and Oracle FlexCube could not make the cut in this study. In summary, with tailwinds behind us, I continue to be cautiously optimistic for Q3 and medium term. Thank you for giving me time to talk to you today. And with that, let me hand over to Banish.
Hi, thanks, Rajesh. I think you've already had a good view to both Manish and Rajesh's view on the the larger businesses of Intellect. I thought I'd step back and talk a little bit about the Seek business. It's primarily 100% born on the cloud. So, directionally, it's in technology area, which is the future. And the other piece that Arun had mentioned earlier about data, I think data is at the heart of the Intellect Seek business. So a combination of cloud and data from a technology perspective has been very successfully implemented in the US. We've now got some good progress both in Australia as well as sort of some areas of interest showing up in the UK. So I think the data platform that we are using right now in Intellect uses, actually, most of you are aware that data has become so important and it's going to be critical going forward. I think what our platform does is it helps our clients take some of the data that they have, along with the data that we provide them from external sources that we have put together. You'll see on this slide, we have about 8,000 data points in the US that we have put together. So we actually help the client triangulate their external and internal data so that they can use the data for being more personalized, more contextual, more accurate. And we're seeing a lot of interest. For example, a leading insurance company recently in Australia used their data and our data put together to help them do better catastrophic planning for reinsurance. So I think the power of data to be able to be put together on our platform is showing enormous interest. I think while we started with insurance, we are seeing a lot of interest in risk management, in business development, in even compliance management in a couple of different business lines. So we're very bullish with using data and having the ability to implement quickly on the cloud, an ideal model. The business is fully subscription based. So I think, again, customers can scale up very easily from a subscription pricing perspective. So that's one area. The other one, which is very encouraging, is we've mentioned over here a term IDX, which is intelligent data extraction. Actually, this is an hyper automation deep learning platform. And we've actually implemented it for a large client. And they were so happy with it that they actually, their first comment was that, hey, this is like magic. And actually, it is a bit like that when you look at it. It extracts data, both structured and unstructured data, and then enriches the data. We've seen in our runs with them 42% improvement in enrichment submission quality. And then it, of course, updates whatever platforms, whether it's underwriting or any other legacy platforms, very easily through our ability to, through APIs to connect. We've seen speed improvement of almost 87%. As a matter of fact, a recent 3 analysts in the US who looked at it were really impressed with the enrichment capability that our data intelligence brings. So we are in the process of putting together a launch that will go out into the market starting next week in the US. And we are very encouraged with the potential that this brings. Finally, I wanted to touch on one of the largest wealth providers in the UK that we do work for. We actually support them in just a variety of areas over the years. I think what I've seen is lately they've been doing excessive amount of work. By the way, they're fully on the cloud. All the platforms we manage for them are on the cloud. But we've recently started using best of class platforms, both for Salesforce as well as Snowflake for them, so that we can actually help them implement in this new digital, sort of COVID times, the ability to connect to customers seamlessly using the best of technologies. So very encouraging that we continue to scale up very well, and we're looking at other customers within the UK market who can quickly enable these same capabilities for them. And I think Arun touched on the fact that we are doing a lot of good work with Australia and India. We've already got 3 clients, but a lot of interest showing up in India. One of our leading clients that uses, and it's the largest insurance company, arguably one of the largest in the world, but largest in India, that uses some of our platform capabilities. They've seen actually 117% increase in remote premium collections during this period. So very encouraged by the scalable cloud native, born in the cloud architecture with a strong set of data and data intelligence skill capability that we built, and seems very encouraging for us to scale up going forward. So that was some of a little bit of input that I wanted to give. I'll just pass it on to Dedeep.
Yeah, thank you, Banish. I'll keep it very small. I'm sensitive to the fact that we also have to take the questions and we have overshot the time a little bit. Uh, while the purpose of the GTB and the GCB business is to secure our immediate future, and they're doing a pretty good job of it, and the purpose of our Seek business is to secure our near future, whereas the purpose of these three businesses, the RTM, the Wealth, and the iGover, is to secure a slightly far out future there. And I'm happy to share that all these three businesses are on track. The leading indicators that we look for in these businesses that we build for the future are whether we are getting invited to the table and how often are we getting invited to the table. Are we winning a deal against the revenue leaders out there, and what the analysts are saying about us. So on all of these parameters, happy to share that we are in a pretty good position. We've got a fairly active engagement going on in India and in Southeast Asia. Wealth RM office has gone live in Singapore, and it has won a large upgrade deal in India. Within Treasury, we are making a mark specifically in the FX and the MM. I think that's standing out. We experimented in the market and figured out that that's where we will have winners in the future. They are making an impact. The iGovernment business is done reasonably well in this month. The post-COVID effects are over and done with, and the business is looking reasonably healthy for the next H2. It did well in October as well. On the product leadership journey, as we go out into the newer markets, we learn from them, and as I said in the Treasury, we have found that the FX product and the MM product are the ones where we make the greatest impact, and that's where you will see the greatest deals coming from in the future. And we are launching a new set of the next upgrades on those two products as well as the next gen Treasury. As far as Analysts is concerned, which is again a very leading indicator for us, Wealth won an award sponsored by IDC. There were 5 companies. This is a global award, and only 5 companies were awarded, and Wealth was one of these. These awards are important because they tell you as to how well are you competing against the best. We are also the best against the revenue leaders out there. So we're definitely among the 5 top folks over there in Wealth. Similarly, in the IRTM, we've been rated the 75th percentile category, and which again means that we are amongst the top few. So in brief, we remain on track for the slightly far out future, and so revenue should be secure there as well. So with this, I pass it on to Praveen, who goes next.
Hello.
Just
Yeah,
pass on
now
to Prabal.
Prabalji. Prabalji, please brief.
Units. I would just like to make 2 points. I think beyond what you have just heard, I think to wrap it up. Essentially, I think the first point is last quarter, I think we stressed on the fact that the company was at an inflection point and that we are transitioning the company to what is a fundamentally more stable and profitable path. And as you can see from the results, I think we have principally stayed the course and consolidated further. So steady revenue growth, EBITDA margin expansion of 400 basis points, etc. The important thing is we achieved this by maintaining a sharp focus on costs and the revenue mix. I think these are the 2 big levers which we have and which was managed this quarter. And we hope to continue on this guided path of steady margin expansion in the future as well. using the various levers at our disposal from time to time. Not surprisingly, though, for the investor community, this is important, is that the annualized EPS is at 18 rupees now, annualized, which is amongst the highest levels we have achieved in many years. So that is one. And on the second part, the second point which I would like to leave you with is that on the bigger picture, which is what we are seeing unfold in front of us. Effectively, I think we believe we are building a company with a significant competitive advantage, which is IP-led and primarily differentiated in the marketplace as an innovation engine. I think that is what differentiates us from most, if not all, other companies. And this has been recognized both by customers in terms of loyalty, which Venkat talked about, 93% repeat business, etc. So customers on one hand, and independent analysts like Gartner, Forrester, IDC, IBS, amongst the others. I think it is this dual interplay of customer loyalty and technology leadership, which will essentially help us in building a sustainable long-term shareholder returns for our investors. I think that is where I would like to leave it. Thanks.
Thank you, Pravalji. Now we open the forum for the questions. The first question comes from Baidik Sarkar. Baidik, you can ask your question. Please take him to the panel. Baidik?
Yeah, hi, good evening. Is this audible?
Yeah.
Thank you. Gentlemen, good evening and congrats on a great quarter. My question is, how should we read the run rate in your license wins for this quarter? Is it a reflection of faster decision times given the environment, or is it just a reflection of the organic effort we've put in over the last few quarters, and it's probably showing up as spectacular growth given how weak Q2 and Q3 of the previous fiscal were? I'd appreciate your thoughts on that.
Thank you, Baidik. I think you answered it. The sustained effort and the focus over the last 4 quarters is driving this change. So our focus on pipeline and destiny deal, which we started putting almost 8 quarters back, where we have just focused on this 41 destiny deal, and everybody is focused 25 4/7 on this, is driving this change and behavior. And our technology suite, which got upgraded on microservices architecture, still we are winning against Finestra and Temenos because our architecture is far, far superior to their architecture. So iTurmeric and our product intersection, on one side it's a cloud native architecture, data architecture, another side the domain architecture. This we are able to bring the best of 2 worlds. There are players which are called Membu and Monzos, which are good cloud player but without a depth there. On the other side, there are players which are legacy player, I would call, 30-year-old, 40-year-old companies. They come with a good depth in the product, but they don't have a infinite scalability and lower cost of delivery on the cloud. So these are 2 intersections we are winning the deal. And now we are getting a good reference site, as Manish was putting. He is the 11th customer in North America. Now we are getting a good reference site and second deal in second quarter in US. I think it's one of the very big positive traction, because US we were struggling from last 4 years. Now we started winning in US and North America.
Thank you, Arun. That's very comforting. That's a very comforting validation, especially given the peer group of Finestra and Temenos. So is it fair to expect this license win momentum to continue for the next couple of quarters, or should we kind of get back into a little lull before we get back to the same level again?
We are expecting this should continue, but the signing deals and the last signature sometimes get impacted on a quarter 1 to quarter 2. Those slips maybe we can't predict in license, as I mentioned you earlier. But overall, we are looking at positive funnel and positive destiny deals.
Thanks, Arun. My last question, in terms of the endeavored 30% EBITDA margin that you kind of predicated for the next few quarters, how would you split that margin march towards cost savings vis-a-vis headline growth? How do you see that evolving towards 30%?
30% EBITDA will come with a 60% gross margin. If you look at it from that perspective, my SG&A costs are as of now close, becoming more like constant at 18.7 crore per quarter. So they may go up when the travel starts by 5-6 crore per quarter. But overall, if I look at it as we move forward, my SG&A cost which should be around 20%. Some 3%, 2% is my ESOP cost, 1% is my provisions, and 5 to 6% is R&D cost. So that's how the composition from 60% metrics, 60% of gross margin coming down to 30% EBITDA margin.
Sure. Thanks, Arun. Thanks, gentlemen. I'll be in touch.
Thanks, Badik. Next, we have Mr. Mohit Jain from Anandrati. Mohit, you can ask your question. Please take him to the panel.
Yes. Can you hear me, sir?
Yes,
Yeah,
Mohit, go ahead.
yeah.
Sir, one is on the advanced market share. Now that we are getting some foothold in the US, what would be your outlook from a 12-18 months perspective on the advanced market share? That is one. And second was on margins. Did I hear it right that you guys are now targeting like 30% EBITDA margins at the current revenue level?
That's right. 30% margin in next 4 quarters.
And sir, on the US side?
So US and North America market, I think we should grow the revenues. Manish, you can speak on it.
In advanced markets, like we've said, consistently be at a 60% plus overall. There will be a quarter here or there. While if you do a larger license in another geography, it shows up. But I would say at a consistent level, we would be greater than 60% consistently on the advanced markets. The good news, I think, is it was insurance and GTB before, which was in the advanced markets. Since the last 3-4 quarters, GCB has also been doing very good, and we're building a good funnel in Europe on GCB. I think that will add up to the advanced market revenue for us.
Sir, last year we were at 62, right?
Yeah, last quarter also we were 61. Don't look at
Last
quarterly
year.
basis. I think we consistently grow from that perspective.
Sir, shouldn't be more like 65-66% kind of a number from a 12-18 month perspective?
I think that's a fair expectation, Mohit, but I would say 60%, 60-40 is a good model. We are seeing all the 60 metrics, 60% advanced market, 60% gross margin. So we are just keeping that as a mandate. It could come to 62, 63 because all the markets are growing.
All right, sir. And congratulations on your cash collection and improvement in balance sheet, sir. Please keep it up.
Yeah. Thank you.
Thanks, Mohit. Next, we have Mr. Suraj Nawandar. Please ask your question. Please take him to the panel.
Hello.
Yes.
Hello.
Please ask.
Can you hear me? Hello. Hi. Congrats on a great set of numbers, and thanks for taking my question. Sir, I wanted to ask about the cloud revenue. I think from this quarter we've started showing ARR. Could you also give the cloud backlog that we used to give, cloud revenue backlog?
Yeah, so cloud revenue backlog is nothing but a multiply this by 5. So or 10, depending upon what you want to do the multiplier. Because cloud revenue, if you are in US, they will multiply by 10. In India, you will multiply by 5. So I didn't want to give those numbers. It's 135 crore plus.
Okay, thanks. And sir, just on the Intellect Seek platform, is it a platform which competes against the likes of Snowflake, or do we work with them? Any understanding of that, if you can give any color on that?
We do work with Snowflake. We use Snowflake for faster processing of the data layers. So Snowflake, we are partner of Snowflake. We are early partner of Snowflake. 2 years back, we signed up with Snowflake. And second thing is that entire platform is comparable to Palantir. So if you look at, there's a company which went public in IPO, in US called Palantir, which is a AI
Yes,
platform-based
yes.
company. So you can compare our platform to be Palantir equivalent platform.
I can just add a little bit to what Arun says. This is Banesh Prabhu. Palantir is using obviously data, consolidating data and using it for various people, including for the government, which is their biggest customer. But we would say that we actually are using a combination of data along with the domain expertise of financial services right now for clients so that they can take better data decisions than before and more remotely and easier than before. So I would say Snowflake is a platform where the data is hosted. It's a great platform. We do a lot of work with them. And they, as you know, it was a very successful platform as well as a very successful IPO, I guess, in the last quarter.
Right.
Having said that, I think we are good partners of both Snowflake as well as Salesforce, which we use for a client of ours. But the platform that we have would be a little bit closer to a smaller version of Palantir in different markets, but with a very strong focus on FS. Yeah.
Okay. Okay. Thank you. Thanks.
Thanks, Nandan. Then we have Mr. Suraj Navandar. Mr. Suraj, please ask your question. Please take him to the panel, Mr. Suraj.
Hello, am I audible?
Yes, yes, Suraj.
So my question is, hello.
Hello.
Yes, go ahead, Suraj.
Yeah, so do we have any non-compete clause done with Polaris when we separated our business?
Sorry, just repeat the question again.
Do we have any non-compete clause with the Polaris when we separated our services and the product business 4-5 years back?
No, there is no non-compete. The two are independent public listed companies, so there is no non-compete clause between the two companies.
Okay, okay. And sir, how should we look at it, the H1 versus H2 revenue split? Is it 50-50 or 45-55? Is there any seasonality in the revenue?
No, your question is whether we'll grow in a next half or not. We are having a growth as we're likely to grow in next quarter. Yeah.
Okay, thank you, sir. Thank you.
Thanks, Suraj. Next, we have Mr. Nishit Shah. Please ask your question. Please take him to the panel.
First of all, congratulations for an excellent set of numbers to the entire team of Intellect. And my question is slightly on a medium term. Arun, when do we see us reaching $500 million in revenue size? Now that we started winning orders and getting traction into the US, when do we see it $200 million on GTB, $200 million on GCB, and $100 million on an insurance practice?
Yeah, so Nishit, that's a good question you have, that we also have aspiration to get it $500 million franchise, the company. I think the big learning is we learned from HDFC model that grow consistently 20% plus and run the engine for 20% operating engine. And I think that will be Nishit, so that we by 20% top line growth, we can grow 40% on EBITDA growth. And that's a phenomenal return to the investors, and this will not have any accidents. If we turn around 30% some year, it may be possible, but as of now, we designed the company not too aspirational, but we want to grow sustained way, step by step, and consistently. Robust growth is important, which we've taken a decision 4 quarters back, which is driving the results of the current quarter.
So at 20%, we will be 6 times in 10 years. So from $200 million, I think it will take us somewhat like 4 or 5 years to reach $500 million. Am I right?
Yeah. It will be something like $400 million in 5 years, so something of that nature. We are looking at it, but let's go step by step. I don't want to be. I think quarter on quarter, year on year, we look at it.
Yeah, it will be 2.5 times in 5 years. So you will reach at 20%, you will reach $500 million in 5 years.
Yeah,
But that would be a meaningful size, isn't it? Or
Yeah,
you
that will be
think
meaningful
we
size,
can
but I
achieve
think
even bigger?
because at $400 million we can generate 1,000 crore EBITDA. That's an issue. Is a kind of a calculation if you want to look at it.
Yeah.
So,
But are
so
we
that,
are we preparing ourselves for that? Are we gearing
yeah,
up the organization for that kind of a size, and
that's
uh, are we preparing us for that?
that's right. That's right. That's our that's why we designed it here. So that's why did I sell service business? Because that's the end of the tunnel for service business. All the service companies are sold after we sold the company. Most of the other companies sold their businesses. So
No,
it's
actually,
a right
Arun,
time.
You made a very valid point. You had a vision couple of years back that the product business will take off, and what we see actions in the US market and international arena is product companies are coming of age, and we're seeing deals happening between 8 and 15 times sales actually.
Yeah,
So yeah, we have a lot of way to cover.
yeah, a lot of way to cover. Indian market has to understand product business and the value of the product business because it's a long-term prospect. It's a 20-year, 30-year-old business. So once you start building AMC, and AMC is growing 20% year on year on a base of 300 crore, that's a net cash coming into the company. So your EBITDA growth is lot of it is assured growth.
True, true. So there's a lot of
Yeah,
annuity revenue which is coming in. So predictability is much more, and hence the multiple should be much higher in
yeah,
future. All the
yeah. People
best.
have to
Thank you very
understand.
much once
Thank you,
again.
Nishit.
Thanks.
Thank you very much.
Thanks, Nishit bhai. Thanks a lot. Next, we have Mr. Rahul Jain from Dolat Capital. Rahul, can you ask your question? Please take him to the panel. Rahul, are you there? Dolat Capital?
Okay, I think we need to close.
Hello.
Yeah, yeah, Rahul.
Yeah, sorry. Can we say that the demand scenario now is more like what it was pre-COVID, or we see some sense of acceleration as well? Any urgency that banks are seeing to tech adoption, given what they have faced in the lockdown period.
I would say that the digital acceleration and some of the things is coming back to the same pre-COVID levels for the demand side. Few cases are still not as good as few markets may not be as good as that, but overall demand scenario seems to be okay.
Okay, and AMC revenue traction was muted in this quarter despite 19 go lives. So, is it there is a gap between going live and start of an AMC, and when we see this picking up?
Yeah, so AMC has the three elements. Basically, go live is the first element. Second is some warranty, 90-day warranty or 180-day warranty, which is there. So that's delays the growth of the AMC. So your question is very valid that there's a delay cycle between the going live and the AMC starting. But 20% is a good guidelines for supporting AMC year on year.
Right, and on the amortization side, any scale up we expect here since our amortizing run rate is still well short of over 1 billion kind of a capitalization we've been adding. So when we see that bump up happening.
It's a regular when we keep on generating products, CWIPs keep on going into the capitalized product. When we launch the product, that goes to that. So as soon as it goes to the live product, we start amortizing it. So amortization, if you observe, there is a pattern that every quarter some number we capitalize. So each time we can capitalize 20 to some 20 crore or 30 crore number depending upon which product cost how much. So it's a not a straight line metrics because each product cost is very different in the CWIP method. So whichever the product gets capitalized on that quarter, then 20 quarters it will get amortized.
Right, but to put the maths simple, eventually this 30 crore number will go to 100, 120 crore. As you know, all this WIP will eventually go into.
That's right. Both will match to each other. But I think don't look at this Indian mindset of looking at capitalization is capitalization. It's R&D product valuation, which we are generating a license link revenue of in hundreds of crores. So that capitalization is very small amount for that R&D effort for any product company. So we are subtracting in our mindset that capitalization is overhead on the EBITDA. It's not an overhead on the EBITDA. We don't have a real estate building or anything which is capex. This is our capex. So for product company, R&D is my capex.
Right.
But
And last,
Indian investor, all of you look at it that as a intangible asset, not a tangible asset. Capex for me is a capex. The product is my capex. Yeah, that's my most tangible asset more than a building. Yeah, building cost me $3 million, $4 million. This is can generate me $20 million revenue. Building cannot generate me $20 million output. Yeah.
right. And just a clarification, we mentioned that our license plus AMC plus SaaS accounts for 56%. Is this SaaS run rate not subset of license plus AMC?
No, it's not a subset. It's a separate line item.
So when we are saying this SaaS is the pure SaaS, which is not counted in any of the license or AMC.
That's right. Either we classify into SaaS or license. Both are mutually exclusive.
Thank you. That's it from my side.
Yeah. Thank you.
Thanks, Rahul. Arun, can we take one or two more questions?
Yeah, there are some questions on a window. So chat box, there are a lot of questions are there. So we can respond to some of the question also from there, and we can take one or two questions also. So Sarnu, if you can respond some questions or business manager can, otherwise I'll respond to a few questions, which is when do we expect company to be debt free? I think we have term loan of today we are mainly with term loan. So almost we are debt free. From a net positive cash, we have close to 94 crore net positive cash in the company. But term loan is a low cost element, so it can be next 4 quarter to 6 quarter. We should be debt free as a company if you prepay those term loan. It's just a question of taking a call when should you want to pre-close, or if it's a low cost, why shouldn't you keep it for better leverage available in the company? About the valuation, about 7-8 times, we all love it. The way you are the aspiration of Vivek Choraria and our aspiration are same. When Indian market will understand product business, then they will recognize it. DSO is high in APAC region. We have 3 clients in the APAC region, which are about to go live in next 2 quarters. So this is in our agreements are such that their payments are due only after going live. Some portion of the payments, and that is increasing the APAC DSOs very high compared to any other region, and that will bring down the DSO better going forward. About LIBOR, I think TV Sinha will answer on chat box, because we are working on that area. So any other question win is led by the either cost factor or a client or quality of innovation. So our deal wins are in advanced market. Cost is not a consideration. We don't win the deal just because of lower cost or lower pricing of Intellect. We win the deal mainly on quality of the product and technology which is there. So person who is investing into a product, he is not bothered about it. For a bank, $1 million, $2 million may be a big number for Intellect, but it's not a big number for the bank to make a decision. And he doesn't make a decision based on saying if somebody is selling $0.8 million, that will be, he will purchase it. I don't think that is we are seeing any of this thing in advanced market. Some other it is there in few markets, and those are the places we are not participating anymore. Our product basket, I think product basket is complete. So that's where Gautam Gupta, you asked this question. Some details on GEM and how is the revenue overall in the business. So GEM, I think, is growing now after COVID, there was slowdown in Q1 on GEM. Q2 was start picking up to some extent. Q3 we expect, Q3 and Q4 we expect healthy quarter, which is there as we go forward on this GEM. So these are the questions from the window, and just one more question or
Yeah. Last question, Arun, we can take is Mayank from Dalal and Garocha. Mayank, you can ask your question.
Thank you for taking my question. Sir, if you could just give me the split between the term borrowings and short-term loans from the 707 million, please.
So it's around 60 crore is a term borrowing and 10 crore is a overdraft globally.
Okay. And the second was, so do we do any sort of bill discounting on our receivables?
No, we don't do right now.
Okay. That's all from my side. Thank you.
Thank you.
Thanks, Mayank. Arun, no. Can we take some more questions or we can close it now?
Just take one question more.
So Vivek Chavia, Vivek, can you ask your question?
Praveen, Vivek is not there.
Not there?
Okay. Then
we can close it. Thank you, everybody. Thanks for joining us. In case any more questions are there, please do write to us or call us. We'll always be there. And in case any more meetings are required, please do let me know. Thank you. Thank you so much for joining.
Thank you, everybody, for joining.